Our next speakers are going to talk about crunching numbers for fun and profit. And we're happy to announce Jager McConnell, the CEO of CrunchBase. I'm sure everybody knows here in the room that CrunchBase is a platform for millions of entrepreneurs and millions of companies to discover each other, millions of investors who go on websites to check the funding of the companies and people behind them. And we have Hannah Kuchler here, San Francisco correspondent for the Financial Times. So Hannah was with the Financial Times for over 5 years. She traveled around the world. And right now she's here in San Francisco. So Jager and Hannah, welcome.
And thanks so much for coming here and spending the time with us today. I wanted to start by talking to you about when I first looked at CrunchBase today, which was actually before I got out of bed. So I was in bed this morning at 6 a.m. And I don't know if you saw, but Snapchat had a filing out of $1.8 billion, which, especially in this funding environment, is an awful lot of money, but is an awful lot of money anyway. So I go to, first of all, obviously I go to the SEC, I go to the filing, and they say it's raised $1.8 billion. But they don't put the investors on there. And what really amazed me is when I go to CrunchBase, you already have the investors up there, right? 6 a.m. Tell me how you do that.
So we have a whole team. Is this on? We have a whole team which is dedicated to figuring out this data. So we have a team in India, we have a team here in San Francisco, and we go and try to find that data and populate it as quickly as we can. Now, if the community, which is a big part of our platform, we've got about half of our updates are done from the community itself. They might have already found it for us. So
okay, so like Wikipedia style.
A bit like Wikipedia, that's right. So if they haven't found it, we'll go and supplement it. And we also have a huge venture partner program. So we have 2,400 partnerships with venture partners all over the world, and they send us their portfolio data. So they may have also provided us that data, sort of behind the scenes.
So that was my real question, right? Yeah. Because people, I think for big, broad issues, people want to, trust CrunchBase and lots of work, and we'll talk about the amazing work you do with partners. But when it comes down to individual, things about which investor invested exactly how much, this is a really secretive place.
Correct.
So you're basically saying you're the back channel for these guys to get that information out.
That's right. Like there's something to be said that if you're a VC, you want to have yourself represented correctly in that source of truth, which is CrunchBase.
Yeah.
And so we like giving VCs an easy way to do that, so they don't have to kind of go through the process of editing everything themselves. They can just send us this spreadsheet, and we go and consume that and put it into the system, so they're sure that their stuff is correct in CrunchBase.
And so have you ever thought of having valuations in there? Because that's what a lot of people like me are kind of desperate for.
Sure. I mean, we try to stay away from the data, which is where we're speculating, where we're trying to guess at what the number is. There are other services that do that, and sometimes they're right, sometimes they're wrong. We try to keep it to as close to the truth as possible. So we may do that in the future, but not right now.
Okay, interesting. So you talked about the community. Tell us a little bit more about who is on CrunchBase and what do they use it for?
Sure. I mean, we have 22 million users using CrunchBase today, looking up company data, and that is, as you might imagine, this long tail of use cases, which is sort of hard to describe in one bullet. But the big ones are 39% are deal makers. So those are salespeople, those are VCs, those are biz dev people looking for their next opportunity. But we have
so it's like an e-commerce site for
exactly
for startups.
Trying to find the stuff that's interesting for them. But there's also 20% of our users are employees looking for, sort of researching their next company, trying to figure out if this is a place I'd want to work at. We've got banks using it to figure out, are these companies legitimate or not?
Do you think that you're like a stamp of approval saying that a company is definitely legitimate?
We're certainly a low, a credit rating for the very lowest of the.
I was going to say,
right?
Theranos presumably is on CrunchBase.
That's right. Exactly right.
No, let's not go too far down that road. So you have this community. How many people did you say use it?
So we have about 22 million people using it,
Wow.
which is a decent amount.
I mean, for what is an industry product, that is actually quite a lot.
Pretty good. Most of the use cases are business to business, so in that way it's quite high.
Yeah, fantastic. And so how do you make money?
It's a great question. So we have two sources of income right now. One is advertising revenue, the other is licensing revenue. So there's many companies that use our data, incorporate into their own applications, and we will charge them for that privilege, and then they can reuse that and send it out to their users. We also have an option which companies can go and use that data internal to their own companies. So they can go and use it for their own business development. You might think about a Nestle or a Bain sort of using our data to better their own products and better their own
I don't understand. How would that work?
So an example might be I would like to do investments as a corporate arm of a VC, as a Nestle, let's say. They're saying, hey, I would like to go and find the companies that use our sorts of products, and I would like to make sure that they are successful.
Yeah.
How do they find those emerging companies? They might use something like CrunchBase.
Okay, fantastic.
Yeah.
So it's not just pure M&A, but there's a lot of that.
Sure, but the sales use case is a common one as well, where hey, I want to know that a buy signal is that when a company gets funded, they might want to buy products that I have. Mm-hmm. We can help facilitate that and help make that data available to those sales teams.
So what does it look like to a paying customer? We all know here what it looks like if I log on now. What does it look like for a paying customer?
So the paying customers today will have access to an API, so they can go and build their own tools around it. So larger companies might do that.
Okay.
But we also made the data available just in Excel. So they can just download it, give it to their sales ops teams or their business development teams and slice and dice it in whatever way makes sense.
Fantastic. And so it really wasn't that long ago that you guys spun out of AOL.
Correct.
I don't even think I really realized that you were at AOL. So could you take us through a little bit of that journey? How did you end up at AOL and why have you now spun out since they've been acquired by Verizon?
Sure. So a couple of years ago, TechCrunch was bought out by AOL. CrunchBase was part of TechCrunch. And it sort of lived a life at AOL for a while and developed. At some point, Tim Armstrong, who was the CEO of AOL, realized that there was more value in CrunchBase than what was being realized. So they realized that they should spin it out. And they started talking at forums like this, saying, are there any folks out there who would like to help us spin it out?
Yeah.
And a venture company called Emergence came along and said, hey, we would love to help you with that. And over a very long period of time, eventually spun this company.
How long?
Complete out. The whole process, I think, was a year. And for the last 6 months.
That's only a long period of time in the tech industry. It's
true.
not a long period of time in lots of other
That
industries.
is true. But at the end of that process, we are a completely independent organization now. We certainly have very close connections with TechCrunch and AOL, but now we run as an independent business.
Okay, fantastic. And are you actually making a profit?
Profit, no, but certainly money, yes. We're doing quite well, and we've got some exciting plans in the future to certainly.
So who are your investors? There's Emergence?
So Emergence was the lead in our Series A, which was about $6.5 million, and then we had Salesforce come in and give a pretty large addition to that in the A2.
So you best buddies with Benioff?
I know him well. So I worked at Salesforce for 11 years prior to CrunchBase. I know him. And
so you were just like, I want to go to this company. Could you?
Yeah. I think they were interested regardless of whether or not I came, but it's really helped, I think, in some ways. But we also have investors like Cowboy Ventures, Felicius, SV Angel, Formation 8, all those.
Which I'm sure CrunchBase shows us that SV Angel is actually in every startup.
That's right. That is true.
So you have this fantastic overview of the valley when we go on CrunchBase. And of course, the question on everyone's lips is the bubble bursting?
Right.
As the master of the data, is the bubble bursting?
So that's a hard question to answer. We can certainly look at data and figure out what the trend is, but it's up to all of you to help us decide if that's actually the bubble bursting or not, or is this a pullback? Is it just a little frothy? It's calming down. It's hard to look at the data and figure that out. We can go back in time and sort of recap some of the things that have happened that we've seen in the CrunchBase data set. For instance, if you go back to 2015 Q3, that was the biggest, largest funding quarter of all time. So $20 billion went into funding in the United States. And that felt good. Everything was
See, I think
glorious.
that's funny. I have seen that in the stats, but I just think from being here and covering stuff, I feel like in the third quarter of 2015, or was it the second quarter?
The third quarter.
Third quarter. I think people were already a little bit worried.
Well, the deals were closing then, but people were starting to wonder, is something up? And Q4 is, I would argue, the real telltale moment.
Yeah.
Because that's when that 20 billion dropped to 14 billion in Q4, so a huge decrease in the amount of investing that went in.
And are you also seeing there a decrease in the number of fundraisings? Because it seems to me that some of the companies like Snapchat that raised a lot of money are doing better, and it's the smaller ones.
That's correct. The smaller, so we saw a 20% decrease in the number of funding rounds, and we also saw a 20% decrease in the size, the average size of the funding round.
Right, wow.
So really big shrink in Q4. And then when you look at Q1 of this year, we saw things start to change again in a positive way. So we saw a plus 8% increase in the size of the funding round. We saw a plus 12% increase on the funding round.
But that's from fourth quarter, but not from the first quarter of the year before.
So doing the year over
that's
year.
year on year. Okay.
So no. So the year over year is plus 9% on the average deal size, but minus 13%, if I remember correctly, on the number of rounds. So again, there was a sort of this pullback. I said, is that? What's happening, right?
Yeah.
There's sort of a hesitation. They saw just what happened in Q4. And they said, what's next? But what's really interesting is if you pick apart the onion a bit and you look at the individual stages, right? Is it a Series C? Is it a Series A, B, C, and so on? You start getting some really interesting insights into how the funding is changing. How are VCs thinking differently about the deal?
So if I have a startup, which series do I want to be at, and which one do I not want to be at this point?
Depends how good your business is.
Well, I mean, let's put aside that everyone thinks their startup is a great business, and say on average, which is a bad point in the funding cycle to be at now.
Honestly, the later you are, the more the world is against you, right? So
really?
That's right. So if you go and look at Series C as an example, just looking at Q1, the size of the investments were 30% bigger than the year before. So Q1 2015 to 2016, 30% increase in the size of Series C. It went to about $900,000 on average. But if you go back and say, well, how many deals were done? It's about half.
Okay.
So this huge, it was like, I'm gonna give you more money, but I'm giving that to fewer people. Mm-hmm. And that means that if your product is good, you're golden. You're gonna get a larger amount of money, you're gonna last longer, you're gonna survive longer, so you don't need to get to the A, where there is a crunch there. So it's a 20% increase in the size, but there's now a less than 11% decrease, 15%.
So just the funnel is narrowing really fast,
Correct.
Right?
And then when you get to the B, the deal sizes are about the same, though the valuations are totally different. But the average deal size are the same as the year before, but the size of those deals, again, or the number of deals, has decreased about 15%. And when you get to the C, it drops dramatically. So now you see a 25% decrease in the valuations, and you still have the number of rounds decreasing. So that, as you look up, it gets harder and harder
So it's basically VCs are asking for more clearer metrics, and they're saying if you've got the fantastic revenue growth, let's not talk about profits because most people around here don't have profits.
Right.
But if you've got the fantastic revenue growth and the promising for an enterprise company contracts coming down the line or whatever, there for a consumer company user growth or whatever, then they're going to fund you. But otherwise, if there's any tiny sign of a stumble, they're out.
That's right. It's just it's becoming a very metrics-driven world and less of the ideation, especially at the B.
Do you think it always should have been more of a metrics-driven world?
No, I think you need to fund innovation, and sometimes that means taking gambles. And I think you'll see that, right? Like the Series Seed are not guarantees. So people are saying, I'm betting bigger on the companies I really believe in. There's very few that have good, strong metrics at that seed stage, right? So there's still a lot of big bets. But if you get to the B and you get to the C and you don't have the sort of like better than box sort of statistics, it's just hard to get funded. It's hard to find especially the valuations that a lot of people expect.
Now, tech has become this incredibly broad industry where actually there are little subsectors disrupting other actual industries. So how do we see that varying across the landscape of tech? I mean, for example, one of the things that people have been most worried about is the on-demand delivery startups, right?
Yeah.
Are they doing particularly badly?
Yeah, so looking back at 2015, we had about 30 of those delivery services, food services, delivery companies funded, and that represented about $1 billion of that revenue, $1 billion of that funding for 2015, which is a significant percentage.
So $1 billion went into on-demand
Food
startups.
delivery, that's right.
Wow.
And then, but if you look at the first quarter of 2016, there was only one. It was DoorDash for $125-ish million.
I mean, that seems, on the face of it, a decent amount of money.
It was a great Series C. That feels good, but it was only one.
Yeah.
So if that's the trend, we're gonna have four.
And do you know anything about who might have been trying to raise money in the time?
I don't have a sort of insight. What I wish CrunchBase had would be who are the people trying and failed at getting funding. That would be a huge leading indicator.
You should definitely work on that one.
You need to figure out how to crack
Try
that
and
nut.
get your VC partners to confess all. Yeah, maybe not. So apart from on-demand, is there other subsectors that concern you in any way?
I wouldn't say concern, but I mean, it is certainly, there's a number of hot sectors and not, and it depends on what's trending right now. Like there's, in the cybersecurity space, that's a very hot thing right now, and that means that companies can come in and get funding pretty easily.
Often without customers.
Correct, that's right. A good story can still get you a 15x valuation with cybersecurity. I shouldn't say but there are very strong companies as well out there, and Anomaly is one that just got funded a couple weeks ago at a very strong valuation, and there's massive growth because they solve a real serious problem that people are facing right now.
But do any of these cybersecurity startups solve the problem in that everyone's still getting attacked constantly? You're
always going to get attacked, but can you defend yourself is the question. That's what they're trying to solve.
Yeah. What about more generally consumer versus enterprise? Do we see any patterns there?
Enterprise is pulling back a bit. So you'll see about an 8% decrease in the number of rounds and even the size of the rounds going into enterprise over the last quarter.
And do you think that is just general wariness, or is about the tech industry, or is that just wariness about the global economy, which is businesses don't buy big new outfits of tech when everyone's worried about all the instability in the global economy?
Yeah, my guess is, and purely guess, is that it has something to do with the public markets. So in early February with Salesforce and Workday and LinkedIn losing $18 billion of valuation, that says, well, is that a business model that I really want to double down on? And that might have put a little bit of the jitteriness in the enterprise space.
Yeah.
But pure speculation.
Yeah, but I mean, some of the consumer names didn't do that well. That first quarter, everyone got hit in the public markets. Right?
Absolutely right. But from the funding side, consumers still had an 8% growth in deal size, but we're flat on deal volume, if I remember.
That's really interesting. And then what about regions and across the world? I know that a lot of your data is quite US focused at the moment, but can you see anything in terms of, are you more likely to get funded if you're based here than if you're on the East Coast or if you're in London? Yeah, I mean, Europe is in the midst of a funding, I don't know if I would call it explosion, there's really a lot of growth there. Right. So you'll see a 20% increase over in Europe on the number of funding rounds, but the valuation or the per round value has decreased a little bit. Right. If you go and look at China and the Asian markets, you'll see pretty flat growth on the number of rounds, but the size is going way up. I'm sure the largest funding round of all time was in China just a couple months ago, which was $3.6
something billion valuation. I mean,
that is a big bet.
Or 3.8 billion investment, on an $18 billion valuation.
Yeah.
That's a big investment.
That's a really big investment. What did you think, actually, on the subject of China, what did you think of Apple's investment in Didi Kuaidai? Do you think that Apple is now going to become a big investor?
I mean, I think Apple's trying to figure out what they do next, and they're probably playing a lot of cards. That's probably not a bad card to try to play if they can crack into that market.
Yeah. I mean, there's been a lot of reading of the runes on that one to see whether it was, a purely financial investment or, make sure China knows it on side. And by the way, we have billions and hundreds of billions of dollars in cash sitting around, so that's not too bad use for it. Can you look at the VCs and the fund managers, and especially because we have in this one of the big characteristics of this boom has been fund managers coming in from Wall Street and being willing to invest in private startups. Yeah. Can you look at that and see who is pulling back slightly? Sure.
I mean, you can, if you sort of put a filter and say the larger investments, the $40 million plus funding rounds. Are VCs embracing those or sort of pushing back on those? And just looking at some of the top ones, you'll see that they're pulling back. We saw about a 20% decrease in the engagement of VCs in that size of round. But if you go and look at sort of the Wall Street, the Janus's, the BlackRocks, those types are also backing off. They decreased the number by 50%. But they've put twice as much money into the 50% that they stake.
Yeah. So we saw today, for example, Fidelity putting more money into Snapchat, despite the fact that last autumn they wrote their stake down by 25%.
That's exactly right. So there's sort of this betting that they're doing, which is saying let's choose fewer horses but bet more on those horses.
And do you think that's the right strategy?
Absolutely.
Yeah?
I really do. I mean, I think if you distribute too wide, you're just going to take broader losses. If you bet on the things that seem to be doing well and hopefully succeed.
So do you think that any of these big fund manager-backed startups are ever going to IPO?
Sure.
I was so disappointed today when I hear this popped up on my phone. And it's like, there's an IPO. There's a tech IPO. And then it's like Twilio, which is like raising $100 million to send people some text messages. And I was like, that's so disappointing. So when is it going to happen? When are we going to have IPO season?
I mean, I think there's already the revolt among the people who've invested and the people who want a return out of this thing. And I think that pressure is going to force these companies to go public. And then there will be this movement to go further and further, like go public with not as huge valuations earlier. So we'll see. But my guess is we will start having these companies rush to public markets because their investors need them to.
Oh, really? So, I mean, why would you, like Uber and Snapchat have all just raised a lot of money this year? Surely that means that we're not going to see that this year.
That's right. I think there's certainly exceptions. And these are the companies that are doing a bad job, which are the ones that are getting gigantic in this private stage. When will they ever go public? I don't know. So
you think the kind of next step down, your mid-range. But is it wise for them, especially if they aren't doing quite as well and their investors want to get them off the book, is it wise to go to the public markets, or would it be much more sensible to do an arranged marriage with a tech company?
I mean, it depends, again, on your business, right? I worked for Salesforce, and they had, $100, $200 million in revenue at the time. Like it's a different world.
Yeah.
And when you look at a Workday, you look at a Salesforce, you look at a LinkedIn, they did, and I suspect that we might move back to that mentality of saying it's okay to go public early and prove that you are a business model that has transparency and can be successful in the public world.
Yeah. So spending all this time, reading the runes, studying the data on startups, does it make you want to invest in them?
Sure. Yeah, I do invest in some of them.
You do?
Yeah,
who have you invested in?
None of them.
You've got to show off to the audience.
Okay, I can show off a little. The one company I can talk about, they're Superhuman.
Okay, what do they do?
It's very early stage. I don't know how stealthy they are, so I shouldn't talk too much about. But go to superhuman.com. And check it out.
I love your language there. How stealth you are. Stealth is something that really annoys me as a journalist, because it's like you write 2 stories about something and then they come back to you and they say, we want to write we want you to do a story on how they're coming out of stealth.
Yeah.
they've already come out. I've written about them twice.
They're sort of tackling the enterprise sort of email problem. Like if Gmail should be rebuilt, like if it was built today, what would it look like and how would it work?
Isn't that Slack?
Perhaps. That's where I can't talk too much about this.
Okay, all right. Well, I'm excited to hear more about it. And so what's next for CrunchBase for the rest of the next couple of years then?
That's a great question. I mean, there's a lot of tactical things that we need to do. We need to fix the UI. We need a mobile app. Those things are going to happen very, very soon.
What do you mean fix the UI? Are we going to see a flashier looking CrunchBase?
Yeah, I mean, it's time for a refresh, and it needs to be just not only beautiful, but also functional and more functional. So we're doing some amazing work on the back end. Not a lot of things I can talk about right now, but it's going to be an exciting couple months for us. And then looking a little bit further out, how do we become this single source of record for all companies? Like, why did the users have to figure out if it's in CrunchBase or not? Is Alaska Airlines in CrunchBase?
And that was a bit of a surprise deal, wasn't it? Not that I follow aviation that closely,
that's right.
but
but it's in there, so we need to get more of that in there.
Okay, so you want to be a database for all the companies in the world, not just the tech companies.
That's right, and we already have that sort of like, it's the Wikipedia of companies, but we aren't quite at the point where if I ever want to know anything about a company, I go to CrunchBase, and that's where we need to get to. And then once we get there, we can start building incredible tools and applications that help people make sense of all that data.
That sounds fantastic. Oh, well, I wish you best of luck on your journey. I hope that you're right and that us journalists get fed some interesting IPOs to study in the next year or two. Yeah, thank you so much for taking the time to talk to us here today.
Thanks for listening to our talk. Thanks.